Okay, I think we're good to go. So good morning again from wherever you're joining us. Welcome to Ivy League. Welcome to our final revision class for Advanced Audit and Assurance. A little bit of what we are going to achieve today, or what we plan to achieve today. So we will start with providing some context around the paper, what the examining team have said, common mistakes, all those things. Then we will go through an overview of the key areas, focusing more on exam techniques of AAA. Then we will practice a full diet question, and then wrap up. So please take note of this, very important. Your mic should always be muted. And if you have to contribute or say something, please ensure that you mute your mic afterwards. Very, very important, okay? And it's a sign of respect for others that we have in the classroom. If you have a question, you want to answer a question, you can raise your hand. I can see that from here. And then if you will be speaking, or when you are speaking, please try to ensure that your background is not noisy. So televisions are not on, music is not playing in the background, or you're on the highway. So there will be breaks at different points during the class. So this is 9:15 effectively. We will take this till about 11:30, go on a short break, come back for a question, and then go on a longer break. So please, once we agree the comeback time, try to be on time. Pay maximum attention, very, very important. I will be very straight to the point on most of the things that I will do. So please pay maximum attention and don't get distracted. I know there are a lot of Premiership matches taking place today. So in case at any point in time you put on the TV and you're listening, remember you already have a divided attention. Participate. This is a very important ingredient for AAA. So if you're asked questions, share your views, or explain certain things, be eager to talk. Right, then we need to appoint a timekeeper. I think it's easy for me to do that. Let me see my list here. Okay. So, all right, are you happy to be our timekeeper? So all you will do is to remind me it's time for break, and I'll give you the specific time. Is that okay by you?
Yes, boss.
Who is the boss? Okay, so yeah, so the first one should ideally be 11:15. So let's, hello? Yeah, so 11:15, okay? And if we need a little bit of extension, I will let you guys know. All right, then, true confession, Shay, I have not been reading. Can I still, and I'm writing the exam, so can I still pass? Yes, you can still pass. Miracles do happen. Just that you're in a very interesting situation. Please mute your mic. Mute your mic, Teresa. So you're in a very interesting situation. So you have to do quite a lot within the next 2 weeks that we have. This revision should help, but then you need to consolidate this with whether it's question practice or going back to those areas you are not very comfortable with, but which are highly examinable. My focus today really will be on the highly examinable topics, the ones that we see frequently, okay? There will be curveballs in the exam hall. The extent to which you are prepared overall will, influence the extent to which you can address such curveballs, but you should at least be very, very comfortable with the FAQs. So that will be my focus today. All right, so this is the syllabus. We have about how many sections? 8 sections, or is it 7 sections? Yeah. Madaki, you may want to mute your mic, please. 7 sections. So now, pretty much every area of this syllabus framework that you see here is important, okay? But certain areas are actually more important than others. A student has no business in the exam hall if you are not on top of section D. Very, very fundamental area. A student generally has no business in the exam hall if you are not on top of section B and C. Those three, they are by far more important than every other section you have here. So for example, if you want to do your final knowledge revision, take notes, knowledge revision. Knowledge revision means I want to do a revision to ensure that the knowledge of the syllabus is in my head. You should carry, whether it's your study notes, your textbook, whatever material you're using, go back to it and say professional and ethical considerations. What are the topics therein? Do a flip through. Practice management. What are the topics therein? Do a flip through. Planning and conducting an audit, which really is a large area, I must confess, do a flip through. Okay? Now, the examiner then says section B will always, in fact, the question that is surest to be examined in section B is section E of the syllabus. That is, it will feature in one of those two 25 marks. So another nice exam technique may be to, for example, be very comfortable with all the topics under review and reporting so that whatever format the question comes, you are able to respond. And by the time you are able to capture these areas, you have that balance so that even if there are surprises in the exam hall, you know, you have it covered. It's no news, it's 3 hours, 15 minutes. Section A is 50 marks that will attempt to cover multiple areas of the syllabus. Section B, 225 marks questions. All questions are compulsory. Questions in both sections are mainly discursive, even though you may have some calculations like analytical review or some other ratios that you may need to compute, for example, to assess going concern. And obviously, we are transitioning to exam-based, computer-based exams. So you also have to be very comfortable with that. I was shocked when I was talking to someone about a few weeks ago, and the person was not even aware that the exam is not paper-based. Okay, so that's to show that, you know, you need to do more to familiarize yourself if you are not already, you know, aware of the platform you will use, how you would access your spreadsheets, how you would access the word processor, and you know, how you will present your answers. Now, there are, on my next slide, I have common mistakes that you know, have been identified by the examining team as the major problem for this paper. Number one, not directly addressing the question requirement. Not directly addressing the question requirement. Sorry, let me ask, what can you guys see on your slide, on your side?
It's still the exam page. It doesn't move from there.
Okay. Okay, just one moment. Looks like. Um, So what you still see is the exam page, right?
Yes, that's what I see.
Okay. Let me just stop and Fidel, can you please mute your mic and switch off your page? All right, so let's hope that it's fine. Please, there's absolutely no need to put on your videos, okay? So just shut the videos so that you don't interrupt what others are seeing. Yeah. There's something about this slide that doesn't want to come up. All right, I think you should be able to see it now. So common
It's up
mistakes.
now. It's up now.
All right. Yeah, thanks. Common mistakes. Not directly addressing the question requirement. This is by far the most popular AAA mistake that candidates make. Okay? The examiner asks you a question, you answer it your own way. Okay? Not directly addressing the question requirement. The examiner says, what audit procedures will you perform on the recoverability of deferred tax assets? You ignored the word recoverability and you focused only on deferred tax assets. When the emphasis on how will you confirm that IAS 12 requirement, which says that deferred tax assets should only be recognized to the extent of future taxable profits that the entity can make and use to claim their deferred tax assets. So examiner is saying focus on recoverability of deferred tax assets. But you ignored the recoverability there and you say, I want to audit the entire deferred tax assets. So that way, they put 6 marks there because you have not focused on the valuation assertion, because recoverability has to do with valuation. You have not focused on the valuation assertion only. You decided to check all the other assertions that you were not asked. So by the time you finish writing 6 procedures, number 1, you were even not comfortable with deferred tax in the first place. Number 2, you now even we went beyond what was required. So the examiner checks 6 points and found that only 2 is acceptable and then gives 2/6. That is the problem. Or the examiner says Evaluate the accounting treatment of the transactions above and discuss and explain the matters to be discussed with management and further actions to be taken in respect of these issues. Obviously, those are three requirements in one. Evaluate the accounting treatment. What will you discuss with management as part of the misstatements you might have identified? Then what further actions will you take regarding these issues? You decided to evaluate the accounting treatment. You went on to further actions you will take without talking about the nature of your discussion with management. Number two, quoting standards without applying them. I'm sure by now you know I hate to hear you quote standard because it adds no value. So, but what the examiner is saying here is not just quoting the title and name of the standard. Please, if you are still here, you still somewhat believe in your head that if I write IAS 1, presentation of financial statements, or IFRS 5, non-current asset held for sale and discontinued operation, that will give you any form of mark. You are seriously joking. In fact, the title of IFRS 5 alone is almost one line. So the time that you would have wasted writing that entire title, please use it applying what that IFRS 5 says to the scenario. But beyond that, what the examiner is also saying here is, people will tell me, according to IFRS 5, a non-current asset is classified as held for sale if the following conditions are met. Blah, 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 blah. So you said all these things, and then you put full stop. The question is, where is the application? How did you confirm from the scenario that the entity has already started an advertisement to locate a buyer? How did you check from the scenario that discussion with a potential buyer is already at an advanced stage? What evidence do you have to show that you have applied that so-called standard that you are stating its requirement to the scenario? Very important. Using vague phrases without relevant explanation. Very popular. In fact, when I saw these common mistakes, I was like, okay. There's nothing here that, I don't think I've not seen. I usually tell you guys in the class that don't think you can earn marks for vague responses. They say bring out the audit risk. You say IAS, IFRS so says that revenue should be recognized when or as performance obligations are fulfilled. There's a risk that the revenue recognized is overstated. What kind of statement is that? IFRS 5 requires that so there's a risk that no, you've got to be clear with your points. There's a risk that revenue is overstated. Revenue could be overstated for several reasons. So which one are you talking about? Or for example, you are asked to discuss audit procedures. And you say, obtain written representation from management. In respect of what? Why do you need that written representation? Or you say perform analytical procedures. How, where, when? How should you do? What analytical, what are we comparing with what? For the sake of achieving which objective? You have to be clear with your answers. Poor presentation and layout. Obviously, there are 4 professional marks that has nothing to do with the technical correctness of your answers. If you are still here, you've not gotten used to, from, date, subject, introduction paragraph, using heading within your report or briefing notes, then you are not ready to earn the free 4 marks. I tell you that free of charge. No to, date, from, subject, no introduction paragraph saying what your briefing note is about, no use of headings within your briefing note. Headings to say, oh, what I want to do here is audit risk evaluation. What I want to do here is audit procedures. What I want to do here is discussion of ethical factors. Then even within audit risk evaluation, identifying them one by one. Number 1, revenue recognition. Number 2, provisions. Number 3, new software. Number 4, new financial controller. You are not yet doing that or gotten used to that. You are not yet ready to earn the 4 marks. Lack of technical knowledge. Obviously, this is preparation. So this is where those who are prepared will be distinguished from those who are not prepared. So technical knowledge of the syllabus, both auditing and accounting requirements. Unable to apply the requirements of ISAs. I think to a large extent that is still technical knowledge, okay? So, but beyond knowledge, I think the key point here is the word what? Apply, application. So similar to, the same word used here, apply. Just a moment. Apply. Next, the examining team says it is important that you write mock exams, okay? So, and importance of mock exams also stated. For example, you should sit mock exams under exam condition. This is not Shay that wrote this down. These are information extracted from ACCS AAA materials. To pass AAA, you need to be able to apply knowledge in a way that is appropriate to situation faced and that addresses the question requirement. Mock exam provide an opportunity to learn from your mistake and to receive feedback on your approach. So if you are here, you still plan to enter that exam, or particularly you've even written this paper before, you want to rewrite the paper, you are not thinking of at least 4 mock exams before you enter that exam hall. Let me let you know that you are putting this exam at risk again. A candidate that want to pass this paper, this particular one, must at least write 3 mock exams that you mark yourself. In addition to anyone that any tutor will help you mark, that you will mark yourself. That is, you time yourself 3 hours 15 minutes. You do it. You carry the examiner's answer. You check. You carry the marking scheme as well. You check how mark is being allocated for each of the areas that you have attempted. You mark yourself. If possible, you can be strict. It's not compulsory, you always have to be strict. It's not all possible answers that are in the examiner's answers. And then you score yourself and you ask yourself, okay, would I have been better off if I had started with section B? So these are the questions you will ask yourself at the end of a mock exam, or any question you are practicing for that matter. Number 1, would I have been better off if I had started with section B rather than section A? Or number 2, did I manage time well? How else could I have managed my time? Did I finish or I didn't finish? Number 3, what did the examiner write that I did not write? Why? Number 4, what did I write that the examiner did not write? Why? Could it be wrong? Could it be right? Try to look for reasons why it may be wrong first before you try looking for reasons why it is right. Because those examiner's answers most times are more detailed than what you need to provide in the exam. Next question. What did I learn from this thing that I did now? What are my takeaways? So practicing exam question and reading examiner's answer is not the reading phase again. It's not reading phase again. You have to be taking away points. What are the things that I learned, especially exam techniques and contents that I learned from this thing that I practiced? Next question. What are the things that I can pick here that could be useful in alternative scenarios? I have an example of someone who, before exam, the person knows he or she is not comfortable with a particular area. And the person carried that same mindset that I'm hoping that they will not test this thing. And you add weeks to the exam. Obviously, you don't do that. You have to take steps to ensure that that area that you are potentially uncomfortable with, which may show up in the exam, or that you deal with it. If you need help, ask for help. So you have to ask yourself questions. There are very important questions you need to ask yourself. At Ivy League, we use June 2019 as our mock question. So you can always go to test rate via my ACCA, assign any of these past questions to yourself. The challenge you may have if you were in my class is that most of these questions would have been solved already. So, but if you are not, you can still assign this. And it's not mandatory you have to use test rate, even though I advise that at least you go there to familiarize yourself. Someone is not on mute, please check your mic. So you should go there to familiarize yourself with it. If it's a previous diet you want to,
I'm not on mic.
you have my permission to take out anybody who you feel is disturbing you. Okay, person refused to mute the mic, just take the person out. Yeah. Yes, so you can pick any previous diet if it's not on the ones already assigned on test rate, and just do it on Word documents, Let's get used to that process of organizing things that way. Pretty much that's what that is about. Now, on this next slide, there are a lot of things going on here. I'm going to share this stuff with you so you can always read them in detail, but I'll just pay attention to the key things. AAA has a wide ranging syllabus, which includes audits of financial information and other specific items. It builds on AA and SBR by introducing complex topics covering different angles. Now, one thing you need to know is this syllabus is actually broad, and that's why you have to be careful not to be overly distracted by the text, because even though it's good to read the text, I see a lot of situations where the things that are really important, are clearly, there's a pattern around them in the exams. So while the syllabus may be a lot, there are some things that regularly show up. So AAA in essence, affects multiple areas, whether it's group audits, whether it's SBR. You can see here, assumed knowledge of financial reporting. Herein lies some of the reasons for the problems with this paper. Not everybody has that average knowledge of accounting standards that can fit the requirements of this question. So it's important that you are at least comfortable with your accounting standard. Advice from an expert tutor. Make use of ACCA resources, cover the entire syllabus, learn how to apply and use knowledge, Practice planning questions, writing full answers, and reviewing them thoroughly. This, fantastic. Fantastic point. Very fantastic point. Sorry, I may have to pick you out, Godia Madaki. Please, please, please. You know, mute your mic. You know, there's really no point. You don't intend to talk, so just put your mic on mute. Huh? And if it is automatically coming off mute itself, then always track it, please. Now, look at what this point is saying. Practice planning questions, writing full answers, review them thoroughly. You remember in class, when we pick a question, I will say, put down your talking points. How will you structure your answer to this question? Now, I agree that for 2 weeks to the exam, you may not be able to write out the full answers to all the questions you want to practice. So while we have agreed that you should at least do 3 mock exams, that's fine. Any other question you want to practice, you know, for the sake of also maximizing your time and speed, you may just plan out your answers. You don't need to write the full thing for all the questions. I'm not talking about the mock. You may just plan out your answers. Oh, okay, this is a 50 marks question. I will write 7 audit risk. I will calculate ratios. I think that will give me 3 marks. I will do this. For the 7 audit risk, itemize them. Use bullet points, you know, but make sure that you are planning your answer at a minimum. I'm not talking of you carry your exam kits. You put one hand where the question is. You put another hand where the answer is. You read the question. You sit down, you are shaking your leg, drinking coffee. You are looking at the ceiling. Audit risk, okay, I think provision, there's an issue here. IAS 15, there's an issue here. IAS 21, there's an issue here. As if it is that same ceiling that we are going to be looking at in the exam. Then the next thing, you flip your hand and you go straight to the answer and you read the answer. What you are still doing is you are still reading. You've not started practicing. Practice will require at a minimum, you carry a question. If you cannot solve it fully by writing down your answers, full answer, you plan your answer and put down bullet points of what you would have written or the point you would have built on if you were in the exam hall. That is the minimum for practice. I'm sure you understand what I mean. Wider reading. Well, wider reading is too late now. So you have resources here. The most popular verbs for this paper, yes, evaluate, explain, discuss, and I think assess is also quite useful. Question approach. Analyze the wording of the requirements. Very important. So is there something hiding in the requirements? For example, what audit procedures will you perform on the technical feasibility of development costs? They did not say what audit procedures will you perform on development costs. They said what audit procedures will you perform on one of 6 conditions for capitalizing development costs, which is technical feasibility. When they use the word evaluate, it would imply that you need to look at alternative angles to the thing that you're trying to evaluate, and you also discuss impacts. Use the mark allocation to guide the length and breadth of your answers. Very important. You know, when I was putting the revision slides together, that's when I saw this material, and I'm like, you can see here, down left corner, it's from ACCA. I didn't build the material. That's why anytime we pick a 50-mark question, I will ask you, how will you end this 50 marks? What will you write? How many points will you give here? Those are the things you must also be doing yourself when you are practicing. And that's what they are talking about here. So don't just carry a question and say, oh, it's 24 marks risk, and you just start writing. They don't do things like that. Number next, read the first paragraph to understand the assignment. You see that? Remember, I normally tell you that you always read the first paragraph to take out 3 things at least from the first paragraph. Can somebody remind me, what are those 3 things? First paragraph of any scenario, what are the 3 things you must ensure you at least take out?
The planning stage, the year end, the nature of the business.
Say that again, please.
The reporting dates, the nature of the business, the planning stage.
Okay, I think it's that last one that you are saying in a funny way. You mean the stage of the audit? Because the stage of the audit could be planning, it could be review, it could be substantive. Yes.
Sorry, the
So
stage of the
you
audit.
must take out 3 things from your first paragraph. 1, what's the year end of the company? The reason why you must know the year end is so that anytime you see any other date anywhere in the scenario, you can compare it to that year end and know whether you are dealing with something that is before the year end. For example, a question 1 could be based on a projection, because when you start planning an audit, it is not yet the year end. But because you want to do year-on-year comparison, you may have to project full year figures. So the examiner gives you projection current year and gives you actual prior year. Or the date somewhere in the scenario may indicate to you that this event you are dealing with is a post-balance sheet event. You start thinking of IAS 10. Number 2, you need to know the nature of the business. Nature of the business is not just, is it involved in buying and selling mobile phones? No, it's not just what the business is doing. Nature of the business will include things like, is it listed? If it is listed, obviously additional things will become relevant. Is it a group or is it an individual company that I'm talking about? What kind of industry is it in? What are the risks? What are the issues peculiar to that industry? If it is a group, does it have foreign subsidiaries or is just within the country? Are those subsidiaries using a different accounting standard or they are all using IFRS? Is it wholly owned or there's NCI? Those are questions that you can pick from your opening paragraphs of your case studies. Next, invest time in active reading of the scenario. You see, I always tell you guys in the class that in a past diet, the examiner, I think she was concerned that there seems to be a problem with the way people attempt questions. So the name of the article she wrote was RTW, read, think, and write. The T was the only capital letter. She says she feels that students actually read the scenario, but the problem is they don't take time to think through the scenario. What are they really asking me to do? What has the examiner told me? What don't I know? What is the requirement? What verb is in the requirement? What's the scope of the requirement before they start writing? Very important point. Identify relevant technical knowledge, accounting as well as auditing. Accounting is as important as auditing for this paper. That's the funny thing. Apply this to the scenario. Organize your planned points. You see? Organize your planned. You must have planned your points. I didn't put these things together. Check you have used all information and exhibit before writing out your answers. Writing a good answer to demonstrate professionalism, pay attention to layout and presentation, write clearly and concisely, and relevant content must add value. All right. Any question for me? Any question for me? Any question yet? No question. Okay. So let's start. I'm sure you have been able to pick 1 or 2 things from the context for this paper. So let's get deep into the specific, very specific syllabus areas that I want us to look at. Now, what you have here is your study guide. I was telling them in AFME class yesterday that when I was writing ACCA, what I normally do around this time to the exam is I'll print the syllabus. Not this, the study guide is high level. Everything you see here has learning outcomes under it, and that's what you will see in the syllabus. So I'll print the syllabus out. Because remember, one of the things we said just a few minutes ago is technical knowledge. You want to be sure that at least that foundation, which is the knowledge, is there. Because if there's no knowledge, there's no application, right? So I'll print the syllabus out. Then I'll start ticking each of the learning outcome statements. Distinguish between audit and assurance. Explain the role of audit committee in corporate governance. If I can explain it, I will tick. Discuss the matters to be considered in dealing with accounting issues such as share-based payment. If I'm okay with it, I will tick. If they say accounting matters related to employee benefit, and I know that my knowledge of employee benefit is shaking, I will cancel. So all the ones that I now canceled throughout all those learning outcome statements, I'll now go back to my textbook and just do a recap, a refresh. If I don't understand, I ask questions. Because at this stage, not everybody in this classroom have the same level of knowledge for this paper. Some people have been prepared very well. So you can ask your colleagues, you can ask your tutors. Okay? You don't have too much time to be doing research now. Ask questions. Those WhatsApp groups are supposed to be vibrating. Sheyi, what is this? Sheyi, what is that? It takes me only a voice note to answer those questions. So I would now focus on those ones I can. So that way, even if I get into the exam hall and I see something I can't answer, at least one thing is sure, I know where it is coming from in the syllabus. I may not be able to answer it 100%, though, but I know where it is coming from in the syllabus. Okay. So, yes, as I was saying, some areas are very fundamental. Okay. So within the study guide, I will just do a quick tick of those areas that, they show up in the exams. Money laundering shows up. Okay. So I'll put that one as medium. So I'll call some medium, I'll call some high. Every other one, is low, I mean. Okay. Code of ethics and conduct, of course, that's high. Fraud and error, medium. Quality control, high. Advertising, tendering, obtaining professional work and fees, high. Professional appointments, medium. This one. Of course, you know that already. Okay. Medium. High. High. Medium. This one, sir. You can decide to put them the way you want to put them. Specific assignments, high. So things like PFI, forensic audits, so things like PFI, forensic audits, due diligence, key performance indicators. Yeah, those are specific assignments. They often test any one of these four. Okay, so that is me using my knowledge of the syllabus to rank areas that I think you can, do a syllabus review to be sure that you are comfortable with them. All right, I move on. Now, the approach I'm taking to the areas I want to review, okay, there are about 5 areas or so that I want to review, okay, is number 1. I give you a sample of what questions in that area looks like, the requirements in that area, what it looks like. Then I explain the exam technique points on how to answer questions on them. Obviously, I'm talking of exam techniques, not necessarily content, okay? So for example, in a revision class, I cannot be teaching you the following are examples of threats to independence, and these are the safeguards you should use. I can't be doing that here. We will not finish if we start that. Exam techniques. So what is the examining team saying about ethical and professional issues? Because that's a popular question. So the AAA examiner says, the auditor's assessment of effective quality control procedures and consideration of ethical issues are fundamental to all stages of the audit. And therefore, these concepts could be examined in any section of the syllabus. That's why you will see ethics in section A sometimes, which is the 50 marks question. Sometimes you will see it in section B. So you can see it anywhere. What forms do they take? In this diet, they said using the notes from the audit committee phone call in Exhibit 5, discuss any ethical issues relevant to the group audit and recommend appropriate actions to be taken by our firm. The action could be the safeguard your firm may put in place, or the action could be other professional actions that you consider necessary. But here, they ask for what? Ethical issues. In another diet, they said, comment on the ethical as well as professional issues arising as a result of company code's planned listing and the services which it has requested from Moritz. So planned listing will be the focus and the service that it has requested. So that's another one. Another diet, they said discuss policies and procedures which Thomason and Co should have in place in relation to anti-money laundering programs and evaluate whether there are any indicators of any money laundering activities. So you see that money laundering, this is an example of how they can test question on money laundering, okay, which is what I ranked as medium on the previous slide. Now, this next one down says ethical and professional issues arising from your review of the working papers and recommend any action. So this is the typical format, and I'm sure most of us are used to that format. So question is this: where they ask me to discuss ethical issues, ethical and professional issues in respect of a question, what should I be thinking about? Number one, what are ethical issues? What falls under the scope of ethical issues? Number two, what falls under the scope of practice management issues? Number three, what falls under the scope of professional issues? The first thing you need to know is that professional issues covers everything. Professional issues is actually, so when we say professional issues, we mean three things: technical, legal, ethical. Ife, can you please mute your mic? Technical, legal, ethical. Okay, so so effectively, the word professionals covers every aspect of auditing. That's really what I want you to know. So if the examiner has now brought out ethical here, then you know that things like practice management, technical, and legal issues are the things that will typically fall under the professional issues. The by far most popular ethical consideration are often threats to independence, threats to integrity, objectivity, and independence. Now, where you have a question on threats, and this thing I want to say now is what a lot of people often forget to do. Remember, you are supposed to, number one, explain the threats. And there is no better way to explain a threat than to discuss what can go wrong. Listen to me and listen good. Labels don't earn marks. Labels like the audit team provided tax services to the client. This creates self-review threats. That self-review threats there, you are assuming the examiner knows what you are saying is a lie. Labels don't earn marks. What earn marks is your explanation of the threats. So another candidate will now say, as a result, the audit team may not perform sufficient review of tax accrual because the firm provided this service. Or may not approach that area with adequate skepticism. So you must explain the threat. 2, you must evaluate the threats. Evaluating the threat means you are trying to assess, is this threat really significant? Is this something we should be worried about? Is this something we should say, oh no, we cannot do this? Evaluating the threat also means what are the considerations that ECCA says we should look into? An examiner has given you a question. The ethical threat there relates to a defined benefit obligation of a client. They want you to come and do the actuarial valuation. You have said that if we do the actuarial valuation, it may create self-review threat for so reason. There's also a self-interest threat for so reason. You know, you have to explain why. Then all of a sudden you just jump, safeguard, the firm should not provide the service, or safeguard, the firm should use separate teams. How did you know that we should not provide the service, we should use separate teams without evaluating the threat? You have to then say, number one, the following are the factors to be considered in assessing the significance of this threat. Number one, is this a subject matter of the financial statements? Then you apply. So what will the application be? Yes, it is a subject matter of the financial statement because defined benefit obligation is a liability that will be presented in the financial statement. Then you say number two, is it material to the financial statement? Then you apply if you are given information. In some questions, they will give you information. They will tell you total asset is this, and they will tell you the defined benefit obligation is this. So you can assess whether it's material. Or they may not even give you quantitative information, but the qualitative information they've given to you may make you know that this thing is likely to be material. Then, third factor, number 3, does it require significant judgment, estimate, and assumptions? Obviously, to do an actuarial valuation, you have to apply both financial and actuarial assumptions in the process. So certainly, it would involve significant judgment, estimates, and assumptions. Sorry, please. Just excuse me for 2 minutes, please. Sorry. I was apparently talking to myself. Okay, so I said, what did I say? What did I say that you didn't hear? So I said that, you know, I haven't evaluated those three things. Okay. You will be able to tell whether, sorry, you'll be able to then, you know, hand some easy marks rather than just moving from explaining the threat to applying safeguards. Okay. Then I said, application of safeguards helps you to effectively discuss the recommended actions in those questions where they say, what other actions do you recommend? Ethical considerations also include consideration of confidentiality. In a past question, the entire idea there was based on the concept of confidentiality. Number next. Ethical consideration also include consideration of fundamental principles. So, for example, an ethical consideration may be integrity of management. Adiola, could you please be on mute? Integrity of management, or you know, professional due care or professional behavior, you know, and things like that. So you know the 5 fundamental principles. Any of them could be the subject of an ethical, you know, discussion. Conflict of interest will also fall on the list of ethical considerations. So remember, there are 4 conflicts of interest, and they are typically conflicts between the objective of achieving independence and giving an independent opinion versus another objective. That's usually the problem. Okay, the independence you need to maintain as an auditor versus other things that are contradicting that, whether it's other services you are providing or the fact that you are also auditing a competitor of the client, or you are getting some commission or financial gain from referral, whatever it is. Mohammed, you have a question? Go ahead.
Thank you. I wanted to ask if you will please share the notes with us after the class, or we should take down our notes ourselves.
Yes, I will share the notes.
Thank you, sir.
Okay. All right, so these are ethical considerations. Now, practice management considerations. Now, in recent times, we are seeing questions that are testing candidates' ability to focus on quality control. And do you know why that is the case? Because most of the audit failures that we are hearing, you know, this one did not do this one did not do that, the auditor did not do this enough, the auditor did not question that enough. By the time you look for the root cause, it's usually some deficiencies in the quality control policies and procedures of the firm. So an exam question may require that you discuss quality control issues that are in the scenario, whether it relates to engagement acceptance procedures that the company has not followed properly, the firm has not followed properly, or it relates to poor supervision for the work, or it relates to inadequate review of work done by subordinates, or it relates to, you know, failure to consult or do consultation when dealing with technical issues. So whatever it is, or maybe even the partner is not providing adequate direction. As you know, direction is a quality control at the engagement level. Practice management also has to do with fees, advertising. In some past questions, they will give you a sample advert, and they will ask you to critically review that advert. Professional appointment, that also falls under practice management. So the things around professional clearance, preconditions for an audit, all those things, you know, very important. Changes in auditors, the procedures to be followed. Very important that you are able to articulate those points where they are relevant. So things like practice description, use of ACCA logo, those are not too popular, but they still fall under practice management. Now, here is the longer brother. Here, you are dealing with other things that you think are relevant. And I will try to give you a long list of those things. What I'm expecting you to do is, once they tell you ethical and professional issues, run the scenario through this checklist and start asking yourself, could anything on this checklist be relevant to this scenario? If yes, put it down and apply it to the scenario. So what are the potential things that can fall under professional? Bolande, ask a question.
Okay, good morning, sir. Yes, I just want to inform the videos not please turn it down because people to see yours because of that.
Say that again, that what?
Like two people have their videos on and I can't see your screen because of that.
Oh, please shut your video. We don't need your video, okay? The only beautiful thing we want to see right now is my screen. Please switch off your video if you have your video on. And meanwhile, if anybody comes up on with a video, you can always press, I think you can tap on the screen you want to see and that will show up, depending on the device you're using anyway. So professional liability. So for example, a scenario may tell you about a potential exposure that the firm may have. Have you talked about the fact that, you know, there may be negligence claims against the company, which may expose them to professional liability? Have you talked about the fact that laws and regulations may require that an audit firm should disclose certain things or may impose additional responsibilities on management, which the auditor may have to report on? Have you thought about risk for the audits? Okay, so audit risk. That's also a professional issue. Remember, part of the things that fall under professional issues are what? Technical issues. Have you talked about audit strategy? So for example, a scenario that is dealing with ethics, ethical and professional issue, may tell you that the company system, you know, the internal audit division has noticed that the company system for recording so transaction is malfunctioning, and it tends to post transactions wrongly or report transactions wrongly, blah, blah, blah. You already know that. You may have to tell the examiner that your audit strategy may have to be more of a substantive strategy than testing controls, because those systems may really not be working effectively for you to rely on them. Okay, so EQR, engagement quality review. Okay, even though you may say that's also a quality control procedure, but some audits may be so risky, or the issues presented therein may require that you recommend that the audit be subjected to an independent quality review. For example, the company therein may be a listed or a public interest entity or a high risk audit. They have come again. Next, going concern. Are there going concern issues in the scenario? Are there subsequent event issues in the scenario? Are there transition issues in the scenario, e.g., opening balances that was audited by another firm? Are there issues related to using the work of others or relying on the work of others in the scenario? For example, component auditor or what's the name? An expert valuer or whatever it is. Are there issues related to corporate governance in the scenario, e.g., structure of the client's audit committee, which, we may need to consider? Would there be potential impact on your audit reports, whether it's reporting externally to the users or reporting to those charged with governance? Is there a scope for discussion of fraud and error in the question? So where I talked about strategy here, will it affect the kind of evidence you will need and how you will need to obtain that evidence? Are there commercial considerations that need to come in? For example, should you necessarily suggest that we should not provide a particular service, where you can say maybe we should stop the audit in order to provide that service if that service is expected to give us more money? Do we have the resources, technical resources, knowledge to provide a service? So these are professional issues. And the list can continue, but at least by the time you subject the scenario to this, you will have some points to put down. Remember, generally from a mark allocation perspective, it's usually 1 mark per relevant point. So if you see, like this past questions here, where this one is saying 10 marks, then you need to discuss 10 points that will give you 10 marks. And that's why I said, when you see a threat, that's a plus. For example, you may be able to see up to 4 threats in a scenario. They won't give you 4 marks, so don't think they will give you 4 marks. They may limit threat explanation to 2 marks. You may be able to explain 3 factors to be considered. They may limit that one to 2 marks. Then you see safeguard, you give 3 safeguard. They may limit that one to 2 marks. So you've already earned how many marks? 6 marks. Sometimes they even give safeguard because that one is additional actions, recommend appropriate actions to be taken. They may give that to 3 marks. So that gives you 7 marks. Then you now know that, oh, I need to now subject this thing to additional professional issues that may get me to the 10 marks. So 3 additional points. You see, so that's why that examiner's comment we read earlier said, plan your point. Say plan where you are. Say plan. Say I will always plan my answer. Say it where you are. Don't come off mute though. Say it where you are. I will always plan my answers. Very important. I think I am done with the first one. Next thing, risk. If you have questions, remember you can always raise your hand and ask. Risk. This one, if it does not come out, come and tell me after the exam and I'll take appropriate actions. Okay? Now, notice something first of all. You know, when I was putting this thing together, the first thing that caught my attention is the size of mark for a single requirement. The size of marks for a single requirement. Now, what's your exam? 50, 25, 25. Is that not what it is? So there's the whole section B, a whole question is 25 marks with its own scenario and requirement. But meanwhile, in question 1, the first question, 1A, as you can see, most of the things you see here is 1A, 24 marks. So this is 1/4 of your exam, meaning attempting this well is as good as attempting a full question well in section B, meaning not attempting this well is already a medication for, you know what I mean. So it's 24 marks. In some cases, it's more than that. Look at this one here. Look at this one here. It says, evaluate the business risk to be considered. Business risk, 8 marks. Evaluate, same diet, evaluate the risk of material misstatement to be considered, 18 marks. How much? When you add the two, 26. You see, it's more than 24. Look at the second one. Significant audit risk, 24 marks. Additional information, as I've told you, it is illogical to be able to explain risk and not to be able to explain the information you will need to know whether that risk has happened or not. It's illogical. Okay, for you to be able to say there's a risk of something happening, that means there's an information you may need that you don't have. So what is the information? So it's closely related. So what's the first thing I want to communicate when attempting risk? Don't take it as if you are just sharing views. You're just writing opinion. Okay, I'm moving on. This paper, pass rate is terrible. Terrible. The average is 3.5 out of every 10 students pass globally. And this includes people that have knowledge of the paper because they are rewriting the paper, they've written the paper before. So they pass, so it means there must be something people are not doing right. If the pass rate for AFM is that same level, maybe one can understand that, okay, that paper is tough, you know, you have to prepare well. But this one, to be honest, if you pick a past question and you read the question, you read the answer, most likely you will understand most of the things you read in the answer. You don't need anybody to explain. It's not Black School's option pricing where you will need someone to explain how the formula works. You will most likely read and understand the answer. But does it stop there? The answer is no. So you have to handle this area with it is 1/4 of the marks for the exam. It is as good as a section B question. In fact, what it means is you should spend about, is that 45 minutes or how do we allocate our time? Yeah, I think it's 45 minutes, right? Yes, 45 minutes on this 24 marks question. It is worth to 45 minutes. All right. Using the information, evaluate the audit risk to be considered. So audit risk, significant audit risk to be considered in planning the group audit. So this diet, it was group audit. The second diet here is also group audit. In the second diet, they want you to focus specifically also, in addition, you should evaluate, okay? So they want you to, in addition to the other ones you will do, but please also ensure that I want you to discuss something around disclosure issues. So then they said, identify additional information which should be requested from management in order to effectively audit the disposal of primal burgers and explain why this information is important. So what did I mean? You say that the entity has investment property. They measure it at fair value. You said in your risk that fair value has an inherent risk because it could be a subjective process. It's subject to assumptions, estimation, and uncertainties, blah, blah, blah. And as such, one or more assumptions made may be inappropriate, which may result in overstating or misstating the investment property values. Good. They now ask you, what additional information will you unit. That's like, that's like giving you free marks. Because if you could say the risk related to that investment property valuation is so, then you must know the information you need. So for example, the information I need are the assumptions made, the methodology applied. Why do I need it? Because I need to know whether those assumptions are reasonable and consistent with my knowledge of the environment. And the methodology applied, I want to know whether it's consistent with the requirement of IFRS 13, which tells us how fair value should be arrived at and the factors we should consider. So I normally say that be careful, additional information is not the same thing as evidence, and certainly not procedures. It is not the same thing as evidence. I agree they may be related, but be careful. For example, valuer's report. You cannot just say valuer's report and expect to earn full marks, because the examiner is more interested in the information you need in that valuer's report. So there you will see who is the valuer, qualification and experience. You may be able to assess it from the report. What are the assumptions made? You may be able to assess it from the report. Assumptions and inputs. Then, what's the methodology applied? You may be able to assess it from the report. Those three things, that's the information you need. So don't get carried away by evidence. They will say additional information is, some people will say minute of board meeting. Minute of board, what's the information you need in it? That is what answers the question. And as long as you have been able to bring out the risk, it is unthinkable for you not to bring out the additional information you will need if you have to audit that risk area. The third diet here is saying evaluate the significant risk of material misstatement. So you can see in one diet it is audit risk, in another diet it is risk of material misstatement. Remember that audit risk consists of the risk of material misstatement and detection risk. In planning the company's audit, so here it is not a group audit. So here it's group audit, but here not a group audit. You should not include, when they say don't do. Strangely, despite this clear instruction, even the examiner chose to bolden the should not. Some candidates will still do that thing. Evaluate the business risk. So that's another type of risk they can have. So I've seen three types of risk now. I've seen audit risk, I've seen risk of material misstatement, I've seen business risk. Finally, evaluate the audit risk to be considered in planning the group audit. You should use analytical procedure to assist in identifying audit risk in some questions. See, this statement, you should use analytical procedure to assist in identifying audit risk. The reason why the examiner is saying that is because specifically there are marks in the marking scheme for ratio analysis. Because if the examiner did not say it, you can still use analytical procedures to bring out audit risk. Just that they might not give you as much information, quantitative information, as they would have given you, where the examiner wants you to specifically use analytical procedures. Usually, when they want you to use analytical procedures, they will give you the income statement and balance sheet, or at least the extract of the two. So immediately you see you should use analytical procedures to assist in identifying audit risk. Don't let anybody tell you there is already 5 marks out of that 24 marks for ratio computation both for the current year and the prior year. Just start with that and take it out. Beyond the ratios, there will be marks for other things. What are those other things? Let's go into it. So, answering questions on risk, what approach should I use? Number one, I will not deceive you. Your ability to answer questions on risk depends to a very large extent on your knowledge of accounting standards. That one, I can't deceive you with that one. But before I even get into that, remember the basics. Audit risk is what the auditor wants to minimize. This can be caused by risk of material misstatements, and the majority of risk of material misstatements are inherent risks. In fact, typically what auditors do is the risk they focus on are inherent risks. Oh, Juliet, you have a question. Go ahead.
Yes, I have a question. So, regarding the other information, you mentioned valuer's report and you said a number of things. So, if you say other information, valuer's report to understand the assumptions, that is one. And now you say another point to understand the methodology. Will you get 2 marks, or should you just lump it up since the report you're looking for is valuer's report?
What you will get is 1 mark for valuer's report only. Now, I normally, however, say that if you are in a tight corner and no other point is coming and you need to move on, yes, you can try to see if you can play tricks on the examiner and whether those tricks can work. After all, they are human. So, but ideally it will be 1 mark.
Okay.
All right, any other question? All right, okay, that's it. Yeah, so as I was saying that what auditors actually focus on is identifying inherent risk. Sometimes they will even rank those risks, and that's where evaluation comes in. Is it low risk? Is it medium risk? Is it significant risk? Is it fraud risk? Is it estimation risk? They will, they will have one way or the other of knowing how terrible is this risk. Then, once they have identified the inherent risk, they will now ask themselves a question. Do the client have controls in place to mitigate these risks? Or the controls over this area where this risk is? For example, if there's a risk related to revenue, which is always usually a significant risk, are there sound controls in place over the revenue system? If your review, based on walkthroughs, based on reviewing operating manual and all those things, shows that the control environment or control framework is not well designed to mitigate the risk, then it means that you are dealing with a high risk of material misstatement. It means your combined risk assessment will be high. You will have to rate that area as high, and that means you must respond with appropriate audit procedures. Detection risk is the other side, and detection risk is the risk that you may not carry out substantive procedures that may detect all the material misstatements that are in the financial statements. So those are the basics, right? The basics. Now remember, however, that there's one other guy somewhere called business risk, which is the risk that an entity may not achieve its objectives or implement its strategies. Business risk will come from internal environment, external environment, regulatory environment, industry, whatever. But why do auditors assess business risk? Because as an auditor, you must understand the entity and its environment, and you must be able to remember that business risk can result in the likelihood of material misstatements increasing. You pick something like changes in technology. If you are operating an industry where there's a rapid change in technology, it is a business risk, but it can also translate to risk of material misstatement. You're operating an environment where there's a high compliance risk or regulatory risk. There's a business risk. It can also translate to risk of material misstatement. Now, as I've said, majority of the risk that you will be bringing out in the exam hall are what? Inherent risk. But there may also be a scope for control risk. There may also be one of detection risk. If the examiner is asking you for, now listen to this, audit risk, you must discuss both risk of material misstatement and risk and detection risk that you can see in the scenario. And detection risks are not often very difficult to identify. In fact, most often than not, I could almost give you a list of risks that once you see these things in the scenario, you know that they are talking detection risk there. Undue pressure on the audit team. Undue pressure. Finish this work within so deadline. So tight reporting deadline. You could call it that, tight reporting deadline. Or supervision and review. There's evidence in the scenario that work done is not reviewed by colleagues or managers or whatever. First time audits. First time audit, FTA. First time audits. That's what I mean by first time audit, FTA. First time audits. So it means those opening balances may contain material misstatements that you may not detect. Sampling approach. Sampling approach sometimes may be faulty, that you may not be selecting the right samples. Subsequent events. Sometimes the auditors may be carried away by the need to audit the full year figure, forgetting that certain events may happen post-balance sheet date, which may require adjustment or disclosure, etc. Okay. If the examiner, however, is asking you for risk of material misstatements, do not mention detection risk. Now, next question. How do I ensure that I am not stating audit risk as business risk or business risk as audit risk? That's a very important question, right? That's number one question. Then number two question is, how do I structure my points? Then number three question is, how do they allocate marks? What did I call number one question? How do I ensure that I'm not stating business risk as audit risk? Number two, how do I structure my points under each of these areas? Number three, how do they allocate marks? So let's answer those three questions. The first one, how do I ensure I'm not stating business risk as audit risk? I think the best differentiating factor that I can tell you, that is somewhat generic, that you can use as a guide, is the moment your audit risk or risk of material misstatement that you want to talk about cannot be linked to something going wrong in the financial statements, that is, the transactions, the balances, and the disclosures or assertions related to those three things in the financial statement, then most likely what you want to talk about is not audit risk or risk of material misstatement. I will say that again. The moment the risk you want to talk about cannot be linked to something going wrong with transactions, balances, disclosures, and related assertions in the financial statement, it is most likely that what you are talking about is not audit risk. So I'll give you 2 examples. Candidate A wants to talk about audit risk, same thing as candidate B. Candidate A says the entity buys its inputs from suppliers across the world and also sell to customers across the world. This therefore means that the entity is exposed to adverse movements in exchange rates. There is a risk that the entity may suffer a loss if there is an adverse movement in exchange rates between transaction date and settlement date. That is what candidate A stated. There is a risk that the entity may suffer a loss as a result of what? Adverse movements in exchange rates between transaction dates and settlement dates. That candidate, as beautiful as the points may sound, have just given business risk. That is not an audit risk. Because the candidate, even though the candidate said there's a risk that the entity may suffer a loss as a result of adverse movement in exchange rate. Obviously, you say losses are recorded in the financial statement. Now, is that not, in the financial statement? No. The fact that something is a loss or a gain recorded in the financial statement does not mean something can go wrong. A loss in the financial statement is factual. It's not a misstatement. When I say something can go wrong, I'm talking about misstatements. So that is a business risk. Candidate B, however, said, background. The company buys its inputs and sells from foreigners and sells to foreign customers as well. And as such, is dealing with multiple currencies. IFRS requires that transactions should be translated based on exchange rate on the date of the transaction, which is spot rates. While monetary balances, such as receivables and payables, should be retranslated at the closing rates, with exchange difference recognized in POL. Therefore, there is a risk that the appropriate spot rate has not been used for each transaction, or monetary items have not been retranslated at the closing rates. They are still using the historical rates. Additionally, exchange difference might have been taken to OCI rather than POL. That second candidate is the one that will get full marks, because that candidate is not talking about adverse movement in exchange rates. That candidate is talking about what can go wrong in the financial statements. There could be other examples, but I'm sure what I'm saying is clear. So that's the answer to number 1. I will summarize the answer again. What I said is the moment business risk versus audit risk. Audit risk must be related to something, let me use simple language, going wrong with transactions or classes of transactions, balances, disclosures, and related assertions in the financial statement. And when I say something going wrong, I mean misstatement. Somebody says, as stated in the scenario, the entity is in an industry where competitive rivalry is high and there have been new entrants. There is a risk that the entity may suffer a significant loss in its revenue, which may ultimately affect its profits. No matter how sweet the point is, if it is not audit risk, it is not audit risk. That is a business risk. Because you must link it to something going wrong from a misstatement perspective in the financial statement. Bumi, go ahead with your question.
Okay, so it's not more of a question, but more of an observation. So based on what you've said now, another way maybe we could try to identify audit risk from business risk if maybe we try to, if the risk can be directly linked to a standard, then can we know that, okay, that is an example of an audit risk as opposed to if it's a business risk?
Well, that is possible, but I am careful not to say that. I'm careful not to say that. The reason is there are several audit risks that are not necessarily related to a standard. For example, new software, new IT systems that have been implemented by the client related to financial reporting. When a client transits from an existing accounting application to a new financial reporting application, there are both business risks and audit risks that may emanate from that, and they may not be related to accounting standards. So while what you are saying is good, is a good indicator, I'm careful not to use that as the basis because it is not absolute. So do you get what I mean, Bumi?
Yes, I do. Thank you.
Okay. Arit, go ahead with your question.
Okay, so it's in connection with business risks and the audit risks. So there's new entrants and there is cash flow forecast. The question has given us, the scenario has given us an indication that there is market share reduction. And then probably they want to use the forecast for a bank loan to stay ahead of competition or something. And then there is an increase in revenue in the midst of the new entrants and reduction in market. Can we link it from this business risk to risks of material misstatements?
If you can find what is the risk of material misstatement there, yes, you can. You can link anything as long as you say the right thing. So the scenario you've given me, does not necessarily make me say, okay, this is the risk of material misstatements in what you've said. So yeah, you can. A scenario may present both business risk and risk of material misstatement. Okay, so if what you've said, for example, you believe that there can be going concern issues, right? The way you would explain going concern as a business risk is not necessarily the way you would explain it as a risk of material misstatement or an audit risk. For example, risk of material misstatement, going concern as a business risk is the risk that maybe this new entrants, competitive rivalry, falling cash flows, falling revenue, impact on profits may result in the entity not being able to continue as a going concern. So that's a business risk, or may cast doubt on the entity's ability to continue as a going concern. That's a business risk, right? But a candidate that wants to bring it out as a risk of material misstatement or an audit risk will tell the examiner that as a result of the blah, 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 competitive rivalry, all those things, the impact on profits, this event may cast significant doubt on the entity's ability to continue as a going concern. Therefore, there is a risk that this uncertainties related to going concern have not been disclosed in the financial statement as required by IAS 1. Okay? In extreme cases, another audit risk related to going concern may even be, like I said, extreme cases, the basis for preparing the financial statement. Going concern is one of the underlying assumptions of financial statement. And the standard says, if it is not appropriate to use the going concern assumption, then an alternative basis should be used. So there is a risk that the basis for the preparation of the financial statement, which includes the going concern assumption, is not appropriate. In an extreme case where you are concluding that the entity is not a going concern or has no alternative but to shut down its operation. So really, one event, one issue can be explained as a business risk, can also be explained as what? Risk of material. So that's why these statements that I put down here, you need to internalize it. That's really the issue. As long as you can link that thing to something going wrong at the financial statement and assertion level, then you are most likely talking about an audit risk. But the moment you are talking about something that will affect the entity's ability to achieve its financial and non-financial objectives, or that may impede the entity from implementing a strategy, or that will have an operational impact on the business, you are most likely talking about business risk. What did I say is the second question?
How do I structure my points?
Good. How do I structure my points? So the way you structure your point for a question on risk of material misstatement, for a question on business risk, for a question on audit risk, they are all quite similar. So I'm talking about structure. I'm not talking of content though. Content is what I've dealt with. Content-wise, I've distinguished what you must say to make something an audit risk different from what you are saying as a business risk. Structure-wise, they are largely the same. So structure. Oh yeah, remind me, what's the first thing?
Identify the risk.
Identify the risk. Okay, that must be in your own village. Actually, you are correct. Identify the risk. So I think what you mean there is the heading, right? State the title of the risk. Okay, so number 2. Here's what next?
Materiality.
Let's be giving examples as we are saying it. So let's say, for example, the risk is translation or exchange or foreign exchange risk, forex risk, okay? Or translation, whatever name you want to call it. What did I tell you guys about the titles you should use to identify risk? Can you remind me? Because these are exam technique points. What did I say as the thing you must ensure you don't do when identifying risk? Yes?
They are not generic.
Exactly. Don't use generic words. Use words that the moment the markers see that title, they know what you're talking about. If what you want to talk about is decommissioning provision, call it decommissioning provision. Don't say accounting estimates, when there could be 4 or 5 different accounting estimates in the scenario. Good. So translation. Oh yeah, what's the second thing?
You determine materiality.
Okay. If you decide to start with that, if you don't mind, let me not start with that.
Background.
Okay.
What should be background? I think I will prefer you give background or what? Context. context. Very important. So you may ask, Shay, okay, I hear you, background context. What am I talking about there? What you are talking about there is this. What's the issue in the scenario? Issue in the scenario. Oh, the scenario says that the entity buys goods in its input from suppliers in foreign country and also sells its product to suppliers, to customers in other country. That's the issue, the background from the scenario. And one of the things I normally tell you about that is don't spend too much time typing out the same thing they told you in the scenario. Just summarize one line. The entity does this, or this happened. You know, one line, 1.5 line, 2 lines, you are done. We're down. Don't spend, and maybe you may even say the good thing about CB is you can copy and paste. Now, if you can go to the scenario, copy what you need, paste it, edit, move on. Whichever one is faster for you anyway. But still within background and context is the relevant guideline. The relevant guideline. The relevant guideline, e.g. IFRS. So IFRS requires that transactions should be recognized based on spot rate on the date of transaction, and monetary items, which are balances, should be retranslated at the closing rates. So I've stated the context of the scenario and the guideline that should ideally have been followed. But that is if the issue you want to bring up is related to something that has a guideline. The guideline, for example, maybe if your risk is, for example, composition of audit committee, then you come to the background. The entity has 3 members or 4 members in its audit committee, none of which is a financial expert or accounting expert. Full stop. Corporate governance best practices and codes require that at least one member of the audit committee has knowledge of accounting and finance. That is the what? The guideline. Then you now come to the next thing. So please, what is the next thing?
Impact or materiality.
What's happening here? What's happening in today's class? Why are you people just explain things up? What's the next thing?
What can go wrong?
State the risk. What can go wrong?
State the risk. State the risk. What, that is, what can go wrong? What can go wrong? State the risk. So since I've already given the context, the guideline, the risk will not be a problem. Herein lies the difference between knowledge and application. When you say IAS 21 says use spot rate on this date, use this on this date, use this on this date, corporate governance code says so must be on the board, must be on the audit committee. All of that is knowledge. Application is when you now apply it in the context of the question set by the examiner, which is what can now go wrong. There is a risk that the entity might have used so exchange rates, or not retranslated this, or not taking exchange difference to this, or as a result of not having someone with accounting knowledge, they may not be able to sufficiently challenge changes in accounting policy, judgments, and estimates applied by management. That's the audit committee. Okay, so you state what can go wrong in clear terms. And your what can go wrongs can be 2, can be 3, can be 4. It depends on, that's why some questions on audit risk, 1 point can be, examiner will put their maximum 5 marks. That is up to 5 marks for 1 point. Because that point has triplets in it. Next, after you state the risk, what is the next thing?
The impact of the risk on
The
the financial
impact. So this impact, generally, when you think of impact, you should be thinking of three things. Okay? Number one, what can be over or understated? What can be over or understated as a result of this risk that you have identified? Number two, so over or understated would imply measurements. Is that not true? So that's measurements. Number two, impacts could be, may not be related to measurements. Impact may be related to what could go wrong in terms of presentation. What could be the impact in terms of presentation or disclosure? Guys, I'm talking about adequacy here. Okay, so the presentation may not be appropriate, which may mislead users, or the disclosures may not be complete. So that's in terms of that. So it's not all the case that it will always be measurement impact. It may be a disclosure impact. For example, the going concern I talked about may just be the need to disclose. So the impact may be incomplete disclosures. Impact is also where you can discuss materiality. So please, that one, very important. Sometimes you notice that I bring it out as a separate point on its own. Materiality. Oh, the item represents 7% of profit before tax. Hence, it is material. You get 1 mark. Then, still as part of that, if the question allows you, you may do trend analysis. So this year, compared to last year, the amount has grown by 7%. So maybe further, accentuate your risk that you have identified. Okay, so if it's business risk, same process. It's just the content that will vary. You identify the business risk, you give background context, okay? You state what can go wrong, and then you state the impact. It's just the content that will vary. What did I say is the third question? Okay. Ogene, you have a question after that, Bumi. Go ahead.
Okay, Shay, just to confirm, man, if, for example, I've done a trend analysis in a table, is it at this point I can come and put some narrative to it?
Yes, you can
Give
do
me some
that.
context.
If you don't trend analysis on a table, that's fine. You can then put it there. But I normally find trend analysis easier when putting the narratives together than putting it on a table. But I mean, any approach that works for you. But remember, materiality, ratios, they give you 1 mark for each one you do, even if you don't explain. But trend, they give you half mark for each one you do. So they are not equally the same marks. Anyway, that's even what we are going to now. Bumi, go ahead.
Okay, so my question is, so for example, you've done a trend analysis and you're saying maybe on revenue now, and you're saying that, oh, the revenue has grown by so percentage versus, the previous year. But
Yeah.
you do not have maybe there's insufficient information for you to adequately conclude on what is driving that revenue growth, could you just say that, oh, there will be need for additional information to ascertain why the revenue has grown by so and so amount? I don't know if
Good point, Bumi. So let me say what you said again, if I captured it well. You're saying you did trend analysis. It shows that revenue has grown by X%, but the examiner did not give you any notes or any additional information that would make you know that, okay, the direction of the misstatements regarding revenue. Can you use just that, what's the name, trend analysis that shows an upward movement to conclude that there's a potential overstatement of revenue? Is that your question?
yes, then you might now say that additional
You need
information
additional information.
Yeah.
Yeah. That's good. You can do that. Just don't do too much of it. Okay. Try to focus more on those areas where there is information. But to be honest, I rarely see scenarios where, for maybe you just use revenue as an example. It could be another item, but for revenue where you want, have one indication or the other. For example, the opening paragraph could have said, the current management has said that the current year has been a tough year for the industry. That's all they said, tough year for the industry. And they didn't say anything specifically about revenue recognition, timing, measurement, or anything like that. So if they have now, based on trend analysis, witnessed a 12% increase in revenue, and the opening paragraph told me tough year, then that's a potential for overstatement of revenue. You understand? But then I agree, if you need other additional information, you can then say, okay, additional information will be required regarding this. John, go ahead.
Okay, thank you, Shay. My question is on the content and how we apply the scenario to our answers. I want to know if there's any particular weight or importance attached to calling out the names that are provided in the scenarios in typing our answers out, rather than just saying maybe the management, the entity, the auditor.
Okay, the MD, the CEO, there's no mark attached to using Mr. Agbugleri actually said when Mr. Fatuki said, no, there's no mark attributed to using specific name, it's just that if we are to put ourselves in the format of, in real life, you may want to mention in your briefing notes, the names of the companies, rather than the company, because there could be multiple companies within the scenario, parent, subsidiary, the firm, and all of that. So you may want to use the name of the company you are using, so that anytime you say the entity, the examiner knows which specific entity. But using designations is just fine for individuals. Arik.
Okay, first and foremost is 1116. Second, my question is, when I see SFP, I see POL, and they're talking about risks of material misstatements. Okay, so I do a table and I put the ratio and then the trend, and then in the discussion, I can now choose which one fits in. But then I'm thinking, in order to manage time, is there an alternative way of arranging this thing for time saving?
I'm not sure I've ever said we should do trend analysis on a table, but ratios, you certainly have to do that on a table. And obviously, you know that each ratio you do, you get 1 mark. So it's not wasting your time. So you do the ratio on the table, and then you start writing your risks out, and any ratio that you see is related to a risk, you apply it there. Pretty much that's it. Did I answer your question? I didn't get your question.
Sorry.
Yes.
For ratios, do we have to show how we
Sorry.
got the...
Sorry. There's a queue.
Okay.
Raise your hand. Kemi, go ahead.
Okay, Shay, my question is when you're calculating materiality, in a situation where you have intangible assets, can you calculate materiality with profit before tax, or it has to be for total assets? Do you understand?
Good question. All right. So the answer to that is this. I guess I'm still going to address it under evidence, right? You've got to be careful to ensure that you're assessing materiality of an item against the right benchmark. Okay. And this is what I normally tell you to do, or students to do. Ask yourself, the item whose materiality I want to assess, where does it impact? Does it impact P&L, or does it impact balance sheet without impacting P&L? Okay, so think of provision for decommissioning. Provision for decommissioning in entirety will not impact P&L. It's a balance sheet item, both the debit and the credit. What will impact P&L is the unwinding of that provisions. Okay, so think of intangible assets that you've talked about. Intangible assets will impact balance sheet. It's the amortization that will impact P&L, right? So you've got to assess materiality based on where the impact lies. However, current accounting treatment may make you do beyond the right area of impact. I will say that again. Current accounting treatments that the examiner says the company has done based on this scenario may make you assess materiality beyond the right area of impact. So what do I mean? Let's say the intangible asset we are dealing with is development cost, and there's a debate about whether they should have expensed or they should have capitalized, because obviously, as you know, you have to assess whether the conditions have been met. If you believe it should have been expensed, but they have capitalized, then you have to assess the materiality on both. If they have expensed, but you believe it should have been capitalized, you have to assess materiality on both. Okay? And always remember, if it is material against any of the benchmark, then it is still material. Francisca.
Okay, I wanted to ask, you said that we should use table for the ratios. Do we have to show like the maybe profit before tax divided by sales, or we can just calculate the percentage maybe on your calculator, then just put the percentage there without showing the profit before?
Later. Yeah, you can just compute and put such a figure. Kemi, go ahead. Yeah.
Okay, when you assess the materiality on both, do you get 2 marks?
If there is up to 2 marks in the marking scheme, yes. But if it's only marks of 1 mark in the marking scheme, wait. Now I must be careful. For questions on risk, you only get 1 mark for that area. But for questions on evidence where you have matters to be considered, there may be up to 2 marks in the marking scheme for materiality. So it depends. Kingsley.
Actually, based on the explanation you gave concerning calculating the materiality on either the P&L or on the total asset. What of the ones because I'm having challenge when I want to calculate materiality on P&L. I'm considering if most of them do not impact on revenue. They'll probably impact on PBT. So should I still go ahead and calculate that for revenue and the materiality on revenue, or just focus on PBT? Because the month again, most of them I could link them to the PBT, but it was difficult linking to the revenue.
Yeah, so assess against revenue only if it affects revenue, okay? So maybe a receivable, a revenue item, or anything that may impact on revenue. Otherwise, it's okay to just restrict it to profits. All right, looks like there's no other hand up again. Okay, so I can move on. So what's my final question? What's the final question that I said we would answer here? The first one was, how do I distinguish in terms of writing business risk, audit risk? Second one, how do I structure my answer? Third one is what?
How are marks allocated?
How are marks allocated? Good. So let's look at marks. Of course, how marks are allocated depends on the question, and what I want to give are broad examples from past questions. Okay, so typically there will be up to 24 marks, 20 marks, 22 marks, 26 marks for risk or related question. And generally, what they do is, if the question requires you to calculate ratios, they won't tell you ratios, but if they say use analytical procedures, for example, then there will be marks for ratios. Okay, so ratios, do your ratios on a table. Okay, and do a minimum of 5, because there will be 5 marks. Now, regarding ratios, remember, the 5 marks here is for even just computing it and putting the figures down, not even for applying it. Okay. Now, the next thing is regarding risk. Each risk that you properly evaluate is usually an average of 3 marks each. Okay. Now, some risks may be so small, not so significant, and that's why I even told you, even in practice, auditors rate risks, whether it's low, medium, or high, or significant. So same thing, you may explain a risk and the examiner may give you 2 marks, but another risk, the examiner may even give you up to 4 marks. But on average, it is what? 3 marks each. For materiality assessments, it's usually 4 marks. Okay, so 1 mark each, usually 4 marks. So each time you bring up a risk and it asks you quantitative information for you to assess the materiality, and you do it, you do that in 4 places, you earn 4 marks. Once you see that you've done it in 4 places, don't waste time. I've marked the scripts before that practically every risk, every of the 8 risks that the student gave, the person computed materiality, and not just even computed materiality on materiality. So materiality of inventory against POL, materiality of inventory against total asset, materiality of inventory against revenue. All those ones are a waste of time. That's why you have to be methodical. 4 times is okay. Next, trend. Anytime you do trend analysis, what we mean by trend analysis is year-on-year comparison and percentage difference. It's usually half mark each. Half mark each, subject to about sometimes 2 to 3 marks. And it is different from your ratios. Okay. Now, the other thing I wanted to tell you is where you compute ratios, you now want to start explaining risks. Okay. There are 2 things I need you to take note of. How many things? 2 things. I will say it again. Where you compute ratios. So you've read the scenario, you've seen your POL, you've seen the balance sheet, you've computed gross margin, net margin, interest cover, gearing, all those ratios, current ratio, what ratio you feel is relevant. You are now faced with 2 things. Number 1, Number one, what are the risks that analytical procedures indicate? Remember, ratio is not the only analytical procedure. There can be threat, there can be reasonableness test. Okay, so what are the risks that ratio analysis indicates? So you may actually decide to pick analytical procedures as your first risk that you're identifying, or risks from analytical procedures, and then just start freestyling based on what you can see. For example, your ratio might tell you that inventory days has gone up, receivable days has gone up, gearing has gone up, interest cover has come down. As you know, all those things have their audit risks, so you can explain them. Okay, that's the first thing. So you should at least have, you may decide that you want to pick risks from analytical procedure and group them all together, you know, and just use paragraphs to separate each one that you want to discuss. Alternatively, you may focus on the subject matter itself. So if it's inventory you want to pick, there may be other risks with inventory, and then in addition, you now link it to the inventory days ratio that you have computed. If it is loan that you see there's a risk there, you may pick the loan, talk about IFRS 9 audit risk that you can see there, and now still link it to the gearing and interest cover ratio that you have computed in terms of the risks that that brings. For example, if interest cover is dropping significantly, the risk is that the entity may violate debt covenants. That is a business risk, but the audit risk is that IFRS 7 requires that any violation of or breach of debt covenants should be disclosed by way of note. So the risk is that they may not disclose it. Okay, so you see that I've given you two approaches. Either you lump sum your risks related to analytical procedure as a single point, and you use paragraphs to separate all the potential risks you can see from an analytical procedures perspective, while you then move on to the other qualitative ones. Or you focus on the subject matters itself, whether it's the line items themselves, whether it's inventory, whether it's loan, whether it's provisions, and then you link it to the ratios where applicable. That's the first thing I want to say. The second thing I wanted to say, I hope you guys are taking note of these things, because I may not be writing everything I'm saying. The second thing that I want to say is the ratios that you have computed. What may be going on in your mind is, how do I apply these ratios? And as I've told you before, I will say it again. You can be faced with one of three scenarios. One of three scenarios. Scenario one, there is a ratio, but there is nothing in the scenario that talks to that ratio. So there is no way you can apply it. Move on, if that's the scenario that you are having for a particular ratio. So just move on, okay? Scenario two, there is a ratio and is clearly related to an audit risk. If that is the case, link it based on what I said earlier. Scenario three, there are audit risks based on the other information given to you, but they are not related to any scenario. There should be a lot of that. That one, you should be happy with that. Yes?
Sorry, Shay, you said the last, you said they are not related to any scenario or any ratios.
Oh, they are not related to any ratio. There are risks in the scenario, but they are not related to any ratio. For example, in the scenario, you saw that the company's group finance director has just resigned, or the audit committee does not have someone with accounting knowledge. or the entity intends to use the financial statements to raise equity just after the audit. Those ones are not likely to be related to any ratio, right? So you should explain them and don't bother about whether you want to do any analytical procedure on such. Okay, so the first thing I talked about is how you would apply analytical procedures, how you present your answers for analytical procedures related to audit risk. I said you can either put analytical procedures as a point on its own and then put all the risks related to that you can see, or you can discuss it as you are dealing with each of the risks related to each line item that you have seen. Then the second thing that I said is your ratios may either be useful, be useless, or be irrelevant. Okay, the first one, useful or useless, maybe I should start with useless, is you've computed it, but you cannot link it to anything in the scenario. No problem. Try to minimize that, but move on. Second one is you've computed it and you can link it to risks in the scenario. Use it. Third one is it is irrelevant. There are risks in the scenario, but there's no relevant ratio related to that. So useless, useful, irrelevant. Any question? No question. Okay? So we are supposed to move to the next thing, which is audit procedures. But I think I was hoping that by now I would have finished this review that I'm doing, but no problem. There's no need to rush. Let's take 15 minutes. We come back by 11:50, I think. Yes. And then when we come back by 11:50, we look at the other areas I have left. I think I have 2 or 3 more. 3 more. And then, yeah, we move on from there. So please be back by 11:50. Thank you.